Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update, and we're now at the end of Monday, and this is the 1st of October, 2018. However, I'm also at 5:15 p.m., which means we're into the next trading session. Obviously not for the grains, which are still not open. They won't open till 7 p.m. Central Daylight Time, but they had a good day, and they had a good day because the President announced his new trade deal, and it's called the USMCA, United States, Mexico, Canada Agreement. And it's not that the agreement is so radically different. Yes, it opens up some of the market for the ag and so on. The fact is that with this, it's behind us. And for that, the market got what we'll call a relief rally. Don't forget that on Friday, you had a big stocks report that the market didn't like, and today the market is back up. In fact, in the soybeans, we're up 12 cents for the week, starting off on a good note. Resistance on the weekly chart should come in at the 862.25, right in that general area, that 18-day average of closes. If you take a look at Friday's action, I want to come here. You were down 9.5. What made the market pop today was the trade deal. It's not that fundamentals necessarily changed, but perceptions are changing. Yes, there's word that farmers and so on might not want to sell soybeans at these prices, and no, there's no more big deals going on with China right here, but that was the news of the day. When you look at the chart action, if we come back to Friday, if you look at Friday's high, I take it back, Thursday's high, 859. You took out the high of Thursday. It was 859.25 today. And when that occurs, it's called, in my opinion, a bear trap. And what that means is until this recent low is taken out, the market's caught a group of people, and we know it was off the fundamentals, who had expected really a Canadian deal literally in the last half hour of the day, and that's pretty much what happened. And they got that, so the market popped on that news. You're over the 18-day average of closes, which means if the market pops, as I say, from a bear trap, one of the numbers could be the 100-day average, but more likely it's the upper Bollinger Band, which you're literally at. So as far as I'm concerned as a market technician, we popped the bear trap. We hit the objective. It was 862.25, today's Bollinger Band, by hitting 864, and the market immediately fell back. You're now in sort of what I'll call this never-never land, caught in this sideways action right through here. Momentum of the market is overbought. Will the market have any leg to it, or is it going to see a Tuesday reversal? The fact that you're just stuck in all the sideways actions against the Bollinger Band doesn't help the matter. When you come to the meal market, meal's at least got a better looking chart as I see it. The market's got momentum pointing up in the slow stochastic oscillator. The market is over the 18-day average of closes. I like that. And the market, if you take a look, took out yesterday's high, Friday's high, and has not yet gone up to the upper Bollinger Band. This is not the cleanest of charts, though, because when I come back to the low of Friday, that low was 307.60. If we come back over here at this low, it was 309.50. So the reality is, even though the swing line's pointing up, you did have a low that took out a previous low. This has always been a dilemma in the swing line. I use it and just look at it and say, okay, I realize it's not a clean chart, but I can't get away from the fact that you at least got the potential of a bear trap. I think it has sprung. I wouldn't be surprised if you get to the upper Bollinger Band. In the soybean oil market, you're at the resistance of the upper Bollinger Band and knocking on the door of the 100-day average in an overbought market in an uptrend. When you come to the corn market, as you can see, the corn fell back and then rallied off this news. If we look at Friday's action. You were down 8.5 cents. You wiped that out today and ended up a penny higher. You didn't quite take out Friday's high, or did you? Friday's high was 366.75. Today's high is 364.5. Now, if you take it out tomorrow, Tuesday, which is already we're into that trading, that still qualifies as the bear trap and sets up the potential for the 373.5 area to be hit as they capture a group of shorts. Taking out the lows of Friday would set in place another crazy chart pattern. Very difficult market right here. In the wheat market, resistance still at 515, trend down. Lower highs, lower lows, resistance 515. You'd have to get over 527 to break the bear pattern, 499 the next support level. In the sugar market, you are oversold in a market that's been in a downtrend, hit last Thursday and Friday, the Bollinger Band, and has bounced away. Let's assume it gets over 2055. Resistance would still be in the 1070 area, that 18-day average of closes. In the coffee market, the big rally we had that finally closed over that 18-day average, and that happened literally right here, as you can see. Didn't quite carry to the upper Bollinger Band, which is a little surprising to me. I would have thought more short covering would come in on that. The trend is up, support's back at 99.75, and you'd have to take out this 96.55 level to break the uptrend at work. Cocoa, this is called riding the lower Bollinger Band, and this is a market that's entrenched in bearishness right now. It does have the embedded reading, so everything's still a go until you lose that embedded reading, as is the situation in cotton. Even though, like cocoa, you got a higher high, lower low, the embedded reading is what you watch. And as you can see, cotton didn't get any play off the, what do we call this, the USMCA deal. I got to get so used to this name. In the cattle market, the meat markets came alive today. They liked the fact that maybe the export markets between Canada, the U.S., Mexico, all open again. You can see you're pushing new highs here, pushing the highs in the feeder cattle market and in the hog market. It's just one of those all systems go from it. We're going to write about this a lot. In fact, we're writing about it. It's only 5:20 right now, roughly. And we've been covering all this and will throughout the night with our staff of writers, giving you an idea what it means, how the agriculture industry is approaching it. Do they like what they're seeing? Does it really mean anything other than psychology just yet? A lot of that's going to be discussed. You might want to get our information by either calling us. We'll put you on the mailing list. If you haven't tried it, go to our website. You can sign up there for our market information as well, or click up here if you're watching us on YouTube. I'm Ira Epstein. You have a good day.